But so much to talk about when it comes to the energy basket, isn't it? You've got Brent knocking at $80 a barrel. You've got the US dollar index at almost $93, at 93. Both those factors for India being a large importer, not good news at all. Simultaneously, you're seeing natural gas prices also shoot up, but that you're seeing in the commodity space. Look at soda ash the way it did yesterday. But to talk specifically on petroleum, we are being joined by MK Surana, the top boss at HPCL. Mr. Surana, good morning. It's always a pleasure talking to you. You've got Brent within kissing distance of $80 a barrel. You're seeing WTI index go up. Back home, the oil marketing companies have had no choice but to come out with a price hike today for petrol as well as diesel. Let's begin this interview by first asking you your reaction on Brent being seen at $80 a barrel, a level we've not seen in nearly 3 years.
Yeah, good morning to all of you. That's true that Brent has been going consistently high in the recent time, and it is because of 2 or 3 reasons. Number one, the strong demand recovery in Europe, in America, in Asian countries, India, and the pace of supply has not been to the same extent in spite of OPEC plus countries increasing the supply by 400,000 barrels a day. It was coupled with around 1.5 million barrels per day capacity going out because of hurricane in Gulf of Mexico, Hurricane IDA. Some of the capacities are returning back, but some may take time to return back because of some more damages. And also some of the OPEC countries not able to ramp up their supplies like Nigeria, Angola, Kazakhstan, in spite of having the quota to increase it. This is also added by around 80,000 barrels a day capacity going out from Libya recently and some skirmish in Sudan as well. So these were the combination of the factor on supply and demand side, also added by the high price of LNG, which is likely to have some of the shift from gas to oil and increasing the demand for oil products. And the way it appears that at least in this quarter, the crude oil price may continue to be on higher side. Of course, it will slowly may reduce as the capacities in Gulf of Mexico returns back. Also, on the demand side, apart from the crude, the products, the gasoline demand has been high. It is to the pre-pandemic level, both in America and Europe and in India. And with the winter season coming, now winter stocking will start. And so diesel demand will also pick up. So the products demand is also high, which is keeping the cracks high, and so is the product prices.
So, Mr. Surana, you're saying this is demand-led price hike that you're seeing as far as crude goes. And if that is indeed the case, can crude prices go beyond $80 a barrel, and at a time when you're seeing all kinds of disruptions in China too?
Actually, a lot of these factors have already been accounted for, which has led to a very sharp rise in the crude prices, almost coming to $80. And therefore, unless there is a spurt of demand or there are some restrictions, like recently we saw some restriction exports from China on the product side, I think it largely accounts for the current factors. And as I mentioned to you, that some of the capacity which is out because of Hurricane IDA in Gulf of Mexico should be returning. And now again, there will be another 400,000 barrels will come from the OPEC countries.
Mr. Surana, there is a serious supply chain disruption which is happening, or which already has happened. How do you see and when do you see things normalizing? Could it be 6 months? Could it be 12 months? Because suddenly China wants to produce less. If China wants to produce less, the energy requirement by the largest economy of Asia starts reducing. India is coming out of a multi-year economic downturn, which means India will start consuming more. America is becoming very fuel conscious, which means they are now implementing ESG projects, they are working towards solar and they are moving towards wind, which means the largest economy of the world will be consuming differently. A lot of changes are happening, sir.
Yeah, Nikunj, that's correct. And that's a good observation on that. There are too many things are happening simultaneously. One thing is the sudden demand pickup in some of the countries, the larger narrative on ESG and too much focus on that, making or scaring the people to invest in the upstream. And at least the European companies too much of focus on renewables. And some of the localized decisions of the individual countries. But ultimately, in the oil is a very widely connected commodity, and many of the energy resources are also having impact on one to another. So, for example, the Indian biofuel program, actually it helps in taking care of part of the increasing demand, at least in India. Now, there are too many things happening, that is correct. But whether all will continue to play in this way, I don't think that's going to be the situation. So the things should find its balance, and ultimately the economics which plays in the ultimate analysis. And so is the case with the gas pricing, which is currently so high. It cannot continue to be so high because at some point of time it will get decoupled, and the people will start shifting to oil. At the same time, we have seen in the past that oil prices above $80 does create high motivation for shifting to other sources of energy, more investment in other sources of energies, and which creates a bit of a permanent destruction in the demand of oil. And the total demand scenario itself, there is a pent-up demand which will play, but it will find its balance. So I don't think that it is going to be continuing to be above $80 for a long, long time. But yes, in the near future, we can see some upswings. As far as the supply chain, other than that is concerned, there are some temporary effects like some of the restrictions which are there from the OPEC countries, which will taper out over a period of time. The Gulf of Mexico events will get evened out. Some of the countries like Libya, etc., things may settle. Iran and Venezuela continues to be an issue. If that oil comes in the market, it may have a dampening effect on the overall business.
So then, Mr. Surana, what happens in the near term? Will GRMs go higher? Will petrochemical margins shoot up? Because one side is disruption, because Chinese are not going to be giving power supply to a lot of manufacturing units. But on the other side, there is a breakdown of logistics, which is also leading to artificial demand drop. So one side, a consumer is going to be consuming less, and on the other side, availability of raw material is less. So what happens to petrochemical margin, GRM? What happens to that end of the world?
No, apart from China, the consumption is not going down on the oil products in the near future. And if we see the countries like India, the festive season is coming. Recently, there were monsoons, so the diesel demand was lesser. The petrol demand is already above the pre-pandemic time, which I mentioned last time also. And as of September, it is almost around 7.5% above 2019 demand of September. Diesel, we are still lesser, and that is because of heavy monsoon in many parts of the country. But as the monsoon recedes and the festive season comes back, the diesel demand should also pick up, and aviation sector is already looking up with almost 60% of the pre-pandemic demand. Now, so the demand is going to be there. So that will keep the diesel cracks and the petrol cracks high. The current petrol cracks were because of the good demand, pre-pandemic level demand from America and the good demand from the petrochemical side, which will, after some time, will get stabilized and on the gasoline front. But as far as diesel cracks are concerned, that should continue to be strong with the festive demand coming up and the winter stocking happening. So that should keep the GRMs in the near future above $5, I think, in this quarter.
Mr. Surana, we are reaching at a level where petrol prices and diesel prices will start hurting consumers. That's a policy which the government has made, something which you cannot control. But that debate starts again. Why are prices so high in India? And why are duties so high in India?
So this issue is a very widely debated issue. The prices have got three components. One is the commodity prices, it is the international prices. It happened to be high currently. Then there is a central taxation, there is a state taxation, which is amounting at the current level also, it is amounting almost more than 50% of the total prices. Now, if the commodity prices are high, that has to be adjusted in the domestic market. And the taxation, which is something is percentage over the price, something is a fixed price. And like excise duty is a fixed element on the total prices, and irrespective of pricing going up or down, it continues to be the same. And the VAT is, some places it is purely percentage, some places it is a combination of a fixed plus percentage, the state level. And therefore, the high rate of taxation combined with the high rate of commodity and of course the exchange rate, that determine the domestic prices, and that is keeping the domestic prices high right now. And we have to keep on aligning to the international prices. So there are little choices to that. And as far as the taxation is concerned, that's a call the government has to take. And recently on the GST, there was some discussion, but ultimately, I think in the near future, MS and HSD are not likely to come in GST, which could have been one help, but I think it is a bit distant.